All right. Morning traders. Welcome to Morning Kappa 8A here. Okay. So, looking at the S&P 500, well, it closed around 6,481 points yesterday, buoyed by investors' confidence, by growing expectation on the Fed rate cut, as market digest dovish signal from the Fed officials and expect easing monetary condition in September. Also, a bit of noise here and there, around the political tension in the US, where Trump trying to dismiss the Fed's governor. However, I think at this juncture, sentiment remains optimistic. And if you follow the ETF that I've shown recently, we have at least secured 5%. Right. So, looking at the US trading stocks that we have published overnight, we have AppLovin Corp, ABP. So, this is a tech app company. So, the stock has a breakout above the $450 level. Well, if the bullish momentum could persist, we can expect the stock travel towards the 500 resistance level on a strong momentum, followed by the next resistance at $550 level. Now, if the counter reverse and bridge lower, do mark at $400 level for the immediate support. Next, we have Carvana, CVNA. So, if you see here, the counter also experienced a bullish rally, straight 5 session recently, and breakout above the immediate resistance at $365 level. Well, if the stock climb up higher, we could see that it might propel towards the 400 level, with the next resistance at $440 level. Now, if the index slight lower below the $330 level, this might signal a possible shift to a bearish trend, to a bearish structure. Right. So, looking at the China 850, well, today last session, the China 850 fell almost around 2% to 3%, reacting to the growing risk on the long-term bond, where yield are falling, showing signs that rally. I think this rally was overextended. Right. So, crackdown among overheated stocks, and also a broader sell-off in the Hong Kong as well as the A shares supported, underscore a market correction at this moment. So, I think at this juncture, profit-taking activities has emerged, especially as eyes turn to macro and also geopolitical uncertainties. Right. Now, just wanted to share with you that this is the inverse ETF that you can write during the index downturn, which I think you could also call it as a hedge. Right. So, essentially, the idea is that when the market, I think the index is turning south, the inverse ETF is, the inverse ETF will show the opposite direction. Right. So, if you look at the WTI crude price futures, well, it underwent a bullish move recently over the past few sessions. We saw that the bears back in action after the counter trend pullback deemed to be completed, as the market, I think, reassess recent optimism, but it managed to recoup the losses on Wednesday's session. So, pressure mounted from the combination of macro and geopolitical development, where if you heard, right, Russia unexpectedly increased its crude export after Ukraine. The Ukraine drone strike So from here, sentiment is mixed today. You can see, I mean, yeah, you can see a red candle today and the next day, it's a green candle. So we expect a consolidation ahead and maintaining our bearish trend, eyeing for 60 US dollar level. Right. So coming back to Malaysia today, FKLI bounced back to close at 1588 points. I think mirroring the broader rally in the KLCI, right? Fueled by the optimism around the US cuts and also strong export data. So uh, from the thematic view or thematic standpoint, I think construction and infrastructure feel big, uh, feel by a big ticket in mega projects. I think it's a clear win, right? Another sector to look is utility and also power. Well, especially RE, right? Continue to benefit from the policy policy tailwinds. Okay, and also tech and also DC or data center, I think remain compelling uh, growth player for Malaysia. But this is a long-term play, lah, right? But yeah, I think thematic play is still holding tightly, right? But however, if we were to look at the trading perspective, fast in, fast out, maybe we can take a closer look at, yeah, we got tech, healthcare, and also consumer, which were the top gainers yesterday, right? Mm, yeah, so we have it in our watch list. So, moving on to the oops, moving on to the Malaysia trading stock. So we have Suncon Group. So I mean it has been on rally. So the stock has experienced a bullish breakout formation above the 6 ringgit and 25 cent. So with that, we expect the momentum to remain bullish and stock able to climb higher to test the next resistance at 6 ringgit and 55 cent, followed by 6 ringgit and 70 cent. So if the counter breakout below 6 ringgit and form a new low, I think this is a signals of downtrend. Okay, so next we have press metal aluminium again. So the stock yesterday has experienced a breakout. Breakout above the resistance of 5 ringgit and 70 cent on the accelerated trading volume. So should the bullish momentum hold and continue to trend higher in the coming session ahead, well, the stock potentially climbing higher towards the next resistance at 6 ringgit, followed by 6 ringgit and 20 cent. Well, if it dropped below 5 ringgit and 50 cent, this would open the door for correction phase. Right. So looking at the FCPO, well, the FCPO closed modestly higher yesterday at 4,488 supported by the renewed buying activity in the global market. I think particularly in the famous futures right now is I think soybean oil, right? After the US EPA announced additional refinery exception. So I think market sentiment at this juncture appears to be optimistic, supported by solid export demand, which also, I think, if I'm not mistaken, surged around 10%, okay, in early August. So production is also, I think, gradually increasing. So yeah, that's it. We 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 still hold our positive trading bias at this juncture. Looking at the FCPO, it might have power or it might have the momentum to propel higher, riding towards the 4,600. Riding on this positive sentiment. Right. So I think that's all from me for today. Pass on the floor to Iftaar and happy trading, everyone.
Hi, thanks, Aiman. So we have KLK results review. So 9 months results came in above expectations at 86% to 87% of full year forecast. So the positive deviation was mainly on the back of lower than expected costs, as well as its recovery in the downstream segment. So in terms of FFB output, year to date 10 months, KLK saw FFB growth of +3% year on year, and however this is slightly below our estimates. But however, management is expecting to further recover in the next 2 months. So for now, we maintain our FFB growth estimates. So in terms of fertilizer, in terms of cost, KLK's 9 months FY25 costs were down 9% year on year. And fertilizer application is also on track. So as such, we trimmed down our cost assumptions accordingly. So the main deviation actually came from its downstream segment. So its refinery segment EBIT margin was at 0.02% in the last quarter, but now it's at 1.2%. So that's a huge improvement. So and this is mainly because of its higher sales volume. So however, moving forward, management is expecting the refining margin to continue to stay compressed as they remain cautious on the outlook. However, they are expecting the oleochem to continue improving. So as such, we maintain our refining margins assumptions, but we improved our oleochems assumptions accordingly. So overall, we are still keeping our neutral call on the stock, and we have revised our earnings by 14% for FY25 and 8% for FY26. So KLK is now trading at 18.5 times, which is at the mid-end of its peer range of 17 to 20 times. Yep, so that's all for me. Thank you, and I'll pass on to the next speaker.
So good morning, everyone. So today we have a results review on IGM Corp's first quarter FY26 results, which saw a core profit of 88 million ringgit, 9.5% year-on-year lower, but missed ours and street estimates, making up 16% of our and consensus projections. The negative deviation came from the weaker than expected property segment, but we saw that the PBT for the construction arm remained strong during the quarter, recording a 46% year-on-year growth in PBT due to higher order book, which led to more active construction works. Meanwhile, property segment saw a 32% year-on-year decline in the first quarter due to lower property sales achieved. Looking ahead, IGM has a balanced order book of 7.2 billion ringgit domestically and 4.7 billion ringgit from JRL Group in the UK, with FY26 year-to-date wins standing at 2.8 billion ringgit versus our FY26 new win target of 5 billion ringgit. We view that this could be achieved, by potentially a data center win from the Klang Valley, and also the civil servant housing job in Indonesia's Nusantara capital, which would be known by end of calendar year 2025. So all in, we adjust our FY26 to 28 earnings by 3% lower as results miss expectations by dialing down on our property billing assumptions. So post adjustments, we arrive at a new SOPTP of 3 ringgit and 62 cents. Key catalysts include the potential of IGM being involved in the segment 2 of the Penang LRT. So now moving on to MRCB's first half 2025 results. The company saw a first half core profit of 1 million ringgit, which missed our estimates, making up less than 5% of ours and Street's full year initial profit projections. The construction arm, the bulk of the drop was due to the construction arm, which saw a 79% year-on-year decline in the first half of this year, as projects such as LRT3 has been nearing completion, while the reinstatement of the 5 LRT3 stations is still in early stages. Meanwhile, its property arm saw EBIT of 7.8 million ringgit versus an operating loss last year, mainly contributed by the write back of a provision for costs related to certain projects. So moving ahead, we view that MRCB would be really busy, particularly next year, driven by the unbilled order book of 6.3 billion ringgit, and they have a tender book size of 6 billion ringgit, comprising a mixture of airport and highway projects. So all in, we slashed our FY25 earnings by 40.5%, but increased our FY26 and 27 earnings by 4 and 5% as we backload our progress billings from FY25 to FY26 and 27. And hence, we arrive at a new SOPTP of 70 cents from 67 cents, which bakes in a 4% ESG premium. So thank you everyone for dialing in today at RG Morning Kappa 8. See you tomorrow at the same time and same place. Take care and have a great day.